My name is Garth Mackenzie, and I'm a technical analyst and an ETF strategist with traderscorner.co.za. On this episode, I'm taking a look at the Nasdaq 100, and I'm going to zoom in from the weekly chart. We're going to look into the daily chart and then move in towards the hourly chart and have a look at the levels that are evident and important to monitor on the Nasdaq 100 this week. But first of all, let's take a look at that weekly chart. This is now a very long-term chart. It goes back over 10 years, and it looks at the bull market on the Nasdaq for the past 10 years, going all the way back to 2010. What's interesting to note on this particular chart is that unlike the other major US indices, this one actually held its bullish trend throughout this recent market crash. The drop all the way down to just below 7,000 on the Nasdaq 100 was met with buying interest at the uptrend support, as you can see indicated by the arrows on this chart. And we've seen the market stage quite a big bounce off of that level over the last couple of weeks. So that's generally a bullish sign. But what's going to need to be, and what's going to need to happen from here is for the market to continue. And that's the questionable part. Now, if we move forward to the next chart, this is the daily chart of the Nasdaq 100. And why I say it's questionable is that this market is now pushing up into an area of resistance. We've got the 50% retracement of this recent sell-off that comes in at about 8275. And we've got the 61.8% retracement of this recent sell-off, which is at about 8625. Now, that is often an area we refer to as the ambush zone, between the 50% and the 61.8% retracement. You'll also notice here that there is a rising wedge pattern evident on the chart, and typically rising wedge patterns like that are continuation patterns within a downward trend, and they very often break to the downside. Also note that the market is beginning to push up into the underside of the 50-day moving average on this chart here. So there's quite a few reasons to begin to get a little bit cautious as this market pushes higher. Certainly it does seem like we could see a little bit more upside in the near term, but I think chasing the market higher here is probably not a good idea. Finally, let's take a look at the hourly chart of the Nasdaq 100. So we're zooming in even more closely onto this chart now. And here you can see again that rising wedge pattern that I've spoken about on the other chart before, but it gives you more detail here. What's evident on the right-hand side of this chart is that there's an ascending triangle pattern quite clearly evident there. And the upper boundary of that ascending triangle is at 8,350. It looks as if this market is poised to push up through the upper end of that ascending triangle. And that would be a bullish break for the short term. And remember, we're looking at an hourly chart here. So we are looking at relatively short-term trading here. A break above 8,350 would be a bullish move that would then open a target up to 8,625. Now, you'll recall from the previous daily chart that we looked at, 8,625 is also the area where the 61.8% retracement of this entire recent sell-off comes into play. So to my mind, I think this market is set up for a very short-term push higher. Looks as if it pushes out through 8,350, pushes up towards 8625. And then I think from that point, we then need to be careful and see if the market was to stage a reversal from that area, that may then signal that the market is beginning to stall, and we could actually see a little bit of consolidation and possibly even a bit of pulling back in the price thereafter. Do keep in mind that first quarter earnings season kicks off this week. So we're going to start to see the large cap stocks on the US market beginning to publish their numbers for the first quarter. We're expecting weak numbers for the first quarter, given the happenings around the coronavirus and the lockdown, etc. But I think also what's going to be critical to monitor is the outlook for the second quarter. All likelihood is that we're probably going to see a fairly negative outlook looking ahead. So the question is now going to be, are these markets pricing in too much good news in terms of earnings? And do we need to see a little bit of an adjustment to the downside to reflect what could be potentially a weak second quarter earnings season to come next quarter? That's all that I've got time for on this episode. I'll be back again later in the week with a look at the S&P 500, and we'll look at possibly some ETFs to trade.